Hello everybody and welcome. In this video we're going to be going over execution triggers using the footprint chart and a few of those concepts. As usual, this video is sponsored by Woo. You can get 3 months of Exocharts for using the Woo link in my description below. These are the topics that will be covered: volume spikes, trap traders, trap delta. There is a difference between those two that I'll kind of configure within this whole video, and you can skip to the timestamps as they'll always be in the description. Trap value area, there'll be a brief segment on that, very brief. Liquidations and open interest flushes. So without further ado, let's get into things. Let's move on. Volume spikes. So I've done kind of separate videos on a lot of these different topics, but I thought it was best to put this into one kind of put together video, to say the least. And volume spikes are basically how I look at these are all kind of my opinion on things. Again, there is no set in stone way almost to look at these things. These are just my interpretations over the years of actually trading these markets day in, day out. But yeah, so comparing the current volume against the average of previous sets of candles. So for example, I would be looking at a set of candles as you're coming to a level of interest. Again, 1.5x is considered a spike for me. So, and I'm eyeballing this data, so I'll go over this now. So if you have a set of candles, whatever, and then let's say you've got your level of interest down here, price approaches, how does this volume down here, you can cluster this into 3 sets of candles, how does this volume here, and you can be looking at this through the FPBS, through all that stuff there, how does that compare against the last average of the last 20? And you're eyeballing this data. So if we just head over to Exocharts here, for example, okay, what I would, and you can see this is an act, by the way, for all reference, and I'm watching this in the future, by the time you might be watching this when Exocharts has aggregated data implemented, but I'm using this as kind of a beta version. But nonetheless, the volume's all down here, and I'm using just Bybit with Binance as well. But you can see the volume. So I'm looking at this volume, and I'm eyeballing the data as it's approaching my level of interest. For example, this could have been a level of interest. So if we just go over to TradingView really quickly, this was a high up here. Okay. 7161, for example, we could mark this. If we head over to Exo, I think it's good to do a live example of this. And 7161. Okay, so you could say, again, imagine if you're trading this level, how is this a spike? Okay, how does 275 million volume compared against the average of the last 20 or so? And again, the text type is really narrow, but we'll adjust this. You can see just eyeballing the data, and I'm eyeballing this, is much higher than the average. This is just looking back at this, 1.5x the average. This is generally higher. Now, what you can be doing is within TradingView itself, volume sweep by Leviathan, indicate which cup. You can have this on your chart. So you can see at the bottom, I've got these spikes up, on the time-based charts. 1.4x above will show this color, this color, this color for 2.5 and above, to show how aggressive the volume is. And that's why using volume spikes can inherently potentially see reversal trades, as I'll cover now. If using a range chart, for me, and again, I find volume to be beneficial as it creates a constant. So what do I mean by that? Well, for example, I've got a range 2000 chart up here, for example. Okay, and what you can see, God, my mind's gone blank. A range 2000 chart here, for example, and each candle, the highs and lows are all consistent with each other. Each candle's the exact same size, okay, but they all have different volumes. So why is that? It must mean that the books are thicker in one area in comparison with the other. You've got to always remember that for every buyer there's a seller. For every market order, there's someone on the other side getting filled with a limit. So if it takes, for example, at your level of interest, just an example here, 400 million volume to push it through, okay, to push from one here to here. Again, you have to be looking at delta and how aggressive is that as well. But if it's taken that much volume to move price up, okay, in the same distance it took here, it only took 144 in comparison to 400. This is comprehensively telling me, without any doubt, that someone's getting orders filled on the other side, especially if you can see within this candle that the majority are actually new buys coming in, again, with open interest spikes. That we'll cover that as well in a second. But that is why I prefer to look at range charts. It creates a constant between those candles. Within a time-based chart, it's not as easy to see this. Whereas, for me, I like to look at the range charts because I can clearly see, okay, where is the order book almost thicker? Although I'm looking at only aggressive orders, and that's what the footprint is, only looking at market orders, I can, by looking at volume and looking at range charts, identify where actually larger orders are getting filled. Because again, you always have to remember, look, 38 million market buys happened up here, but on the other side, and this is why I'm not the biggest fan of order books, but limit sells are also getting filled on the other side of that. If someone's 30 million market buying, smashing up that level, someone's doing those on the opposite side. Again, I'll very briefly touch upon this. I'll probably do another whole video on it, and I probably have already. But in the, why would it make sense for the biggest players in the market to advertise their positions on the heat map? Again, there are some benefits to heat maps, and you can look at spoofing and iceberg orders, etc. But I like to look at categoric data using the footprint, using aggressive orders, using range charts to create a constant with volume, using volume spikes, etc. But that's my rant on that. Volume spikes, again, hopefully that will make sense, and hopefully you found that useful. Trap traders. So trap traders, for me, the difference between trap traders and trap delta that I'll be covering in this video is going to be based upon open interest. So trap traders for me is a significant focus on open interest. What I mean by that is it's looking at new breakout traders, new trap traders, people getting caught offside. And that is fairly similar also with trap delta, but trap traders is mainly looking at spikes in open interest to the upside and seeing people who inherently buy the breakout, sell the breakdown, that are doing that, and we can cover that now. So again, positive OI above levels of interest, typically breakout levels that are easily noticed by the masses. So what I mean by that is when you have kind of pattern plays out, so you can be looking at different patterns, maybe even up here, not only just patterns but liquidity levels. You've got a high here, people might be wanting to buy a breakout. How is the open interest looking at this high here? We can then head over to Exo, and there is no, again, when you're looking at stuff like this, there is no almost a mechanical way to do this, at least that I use. It's a bit more discretionary. You have to be kind of just going, okay, how is this OI, faring up at these levels? And in this case, actually, it does look fairly strong for a potential larger pullback, I must say, if I'm honest with you. And again, I'm not in any trades or anything, but this is just my general thoughts on the market. If I'm looking at it from this perspective of trap traders at the high, what we're seeing at the very high, again, a lot of liquidations. We'll come onto this as well later, but also look at these large open interest spikes at the high, and you have to be using this in unity with delta. So large positive delta coming in, large open interest increasing. These are new longs breaking out above the high. These two candles here. Okay, these two candles here, and even this candle, you could say this candle, I'll focus on the larger two. These two candles here are breaking above the high, causing, this, they're buying the breakout, okay? These are just potential trap traders. For me, I would only say they're trapped once this candle's low is lost. Okay, so upon this candle here, and this is, again, called execution triggers, because once this candle low is lost, only then would I be like, these longs are now offside. These new breakout traders at the high are offside. Okay, because even on these pullbacks here, these longs are still on side, but once they get caught offside, that has the potential fuel to now push price much further down in the opposite direction. Okay, because once they're offside, they might want to close their position, and when you close your new long position, what are you doing? You're actually shorting the market, pushing price back down. That could have been these guys being closed out here, and that's the beauty of it. You don't necessarily know when these guys close out, but I'm making the interpretation that they would potentially close out should price move further in the opposite direction of their position. Okay, so that's trap traders focusing on the spikes in open interest. That's kind of the bread and butter of it. It's focusing on spikes in open interest at fairly obvious, to an extent, breakout levels, liquidity levels, and this video isn't going to be specifically focusing on levels of interest themselves, but more so just what to be looking at your levels of interest. I will discuss that maybe briefly, a few levels of interest to be looking at, but mainly trap traders itself, okay, is going to be happening at breakout levels. It's fairly common as well, just talking from my own reference. If you see a triangle, something like this, a triangle, okay, and then again, that open interest is the main concept of it. You then see a break, people are trying to trade a breakout, and then up here of this candle, you see a large increase in open interest, new longs coming in, and then price puts them offside. The key is price putting it back offside. That would trigger your entry for you. Okay, so as soon as price has done that, that is the potential to see trap traders. So again, triangle patterns, even like head and shoulder breaks. So something like new shorts come in, you get the reversal when you see the move up, and everyone talks about these different things of trade this, trade that, but no one's really talking about the execution side of things, which is why I kind of thought I would do this video. I think that's really important to kind of get across this point of what to actually do at these levels and what to exactly be looking at least from my perspective of how I've been doing this, because no one's taught me this before. This is literally all from my own interpretation, and this could all be wrong for all I know, but I'm telling you what has worked for me, and the data that is being provided to me. I'm telling you this is exactly what I'm seeing and exactly why I'm seeing it like this. So yeah, that is, again, breakouts, looking at trapped open interest above or below levels. Okay, heading back over to the slideshow, we have trap delta. So this is, I've put a diagram on here to kind of simplify the analogy for you all on this one. But for example, looking at delta max minimum on its own, maximum on its own, and using those respective candles to see when a certain amount of delta is trapped for an entry. Now, the thing with using range charts for this, not only range charts, we can use on a time-based chart, etc. I don't want you to all be sucked in. Oh, let's use a range-based chart. I must be using that. No, not necessarily. There, I still, on occasion, do use a time-based chart for execution. I'm just talking through different methods for all different time frames. And this isn't just a video, but I really want to make this very clear. This isn't a video for you to just go out and go, I'm going to use this execution method and make millions of pounds or dollars, whatever it is. No, not at all. This is trying to give you the basis points. I mean, trust me, I could really go deeper into depth here in regards to how my exact execution system works. But the honest truth is, I don't want to give that out. I don't give that out to anyone at all, really. You know, whether you want to pay me for it, that doesn't exist. No one can pay me for that. This is just me kind of giving you the type of things you want to be looking at to potentially get a heads up on what you might want to create a system for yourself, and helping you build a system for yourself in regards to execution on all of these different topics and subjects. So again, trap delta, for example, rather than looking at final delta, so we just head over to Exocharts here. You've got three different things here on my chart. You've got delta, delta max, delta minimum. I don't really pay attention to final delta, and I've got a whole video on this. You can go watch it. It's called like trap delta, extended delta, something like that. Go watch it, because it talks about the swings in delta from, you know, how delta starts at zero, goes to swings one way, swings the other, etc. When you're looking at trap delta, I'm really focusing on the most amount of delta sold into a candle, or the most amount of people buying into a candle. So I'm looking at delta max and minimum, and using this diagram here, for example, it really is, you know, you could be using a certain amount of trap delta, and this is disregarding open interest, delta max minimum, to kind of decipher where you want to be entering in regards to people aggressively selling. So for example, this is just an example. You know, let's say you want to see a roughly 10 million negative delta through 3 candles, or whatever you want to see 10 million trap before you want to enter. Example, level of interest is here, for example, prices come into it. How would you decide whether to execute? Well, you see minus 3.2 million here, minus 4.41 million here, and this is delta minimum. I'm drawing, these are all delta minimum, just example in this candle. This tallies up to 7.3, and then you've got another 2 million here, so that's 9.3, roughly 10 million, for example. You can then go, okay, as soon as this candle is closed above, you now have an entry where 10 million is trapped, and your invalidation is below this candle. You've seen a certain amount of delta trapped, and now you're looking for an entry to, you know, kind of push that delta further in the opposite direction. Now, this is, you know, I'm giving an example of 9-10 million delta trap. This is not, don't just go and copy this method at all. It, you know, it requires a lot of messing around with this, what exchange you want to be using, what chart you want to be using, what time frame, range chart, tick chart you want to be using. And I'll do a whole video on range charts, because I've got a lot of questions on those. You can also see delta in correlation with the OI that supports theory of the people buying and selling the breakout. So yeah, like I said, you can also see, this is the second time me recording this video. The first one got absolutely ruined with no audio for 42 minutes. But yeah, you can also see open interest come in within these candles, but it's not a necessity, and it's mainly focusing on the trap delta itself. Now, ideally, what I would do is track this type of delta and then also track the open interest. So you can kind of use a mix of two, and that's really nice, okay? We're using one and the other really in combination. So it's really useful. Again, trap traders for me is open interest. Trap delta is looking at delta max minimum. Again, at the highs, this would be looking at delta maximum rather than delta minimum at your levels of interest to decipher an entry again. So yeah, trap value. I've done a whole video on this. I won't really dive into this too much. There's a few things I wanted to talk about. Individual candle setup. I'm going to cover this in a minute. There's a bit of an asterisk. We can edit this now. There's a bit of an asterisk to this. Shout out to one of my students, because I'm about to show you something that you know is really quite useful in my opinion, that some of you who do use this method still want to execute upon. But yeah, it's where price closes outside of the value area, away from it, and that's it. You get an entry. You're basically trading a mini range breakout. Now, everyone says I trade reversals, but in reality, if you trade trap value area, you are trading a breakout, because this value area is essentially a range. What you've got is a range, price traded within this range, and the candle, you know, price essentially just closed outside of the range, and now you're using that as your invalidation. Okay, it works best on time-based charts, so we can you know, it works best on time-based charts. Doesn't, you know, it only really works on time-based charts, if I'm being honest with you. You know, if we're looking here on a range chart, you can see every candle is almost a trap value area, but it works best on time-based charts. Okay, now what you could want to do, and something one of my students recommended, kind of a bit of a heads up here, is instead of just looking at one candle, you can be merging different candles together. Again, I don't really trade the trap value area setup too many anymore, if I'm honest with you. I have multiple different ways of executing, and that doesn't mean it's a bad thing at all. It's just something I'm not swaying towards, at least in these current market conditions. That might change within the next few weeks, months, if the price starts trending sideways a bit more or up. It requires certain different market conditions to actually trade this, for me at least. But yeah, you can be merging 2, 3, 4 candles together and going, okay, if price closes outside of this value area, now I'm going to be entering. So it's not just about looking at one candle setups. You can be looking at a few merged together in that case, but it's looking, and I'm using the dynamic profile tool for this. So on the left hand side, you've got dynamic profile tool. Click there. I've got it hotkey to D, and you can like merge these and go, look, you got 3. The value is there. Close outside, enter, etc. So there's a lot of ways to be looking at this, not just kind of one linear way of looking at trap value areas. Okay, but that's the way I like to look at things. And there's a whole video on that. It's literally titled trap value area. So go watch that if you want more info on it. To be honest, liquidations, same as volume spikes. I won't dive into this too much. In regards to relative, it's fairly relative. Can be in my opinion on this one, it can be beneficial to look from my testing at least. This isn't me just having a bias, by the way. A lot of the time people go, oh, you don't like this, you don't like that. I'm not trading this apologies for that. I'm not trading this from a point of bias in the sense that I have to trade Bybit, or I hate Binance, or I hate all this. I'm talking to you from my own experience in what has worked for me. And I'm not saying just because something works for me or doesn't work for me doesn't mean it's not going to work for you. I'm always out there and advocating doing your own testing. But for me, again, like I said, a bit of a rant over. Can be beneficial to look at multiple exchanges for this. For Bybit, BTC, USDT, I look for anything beyond 30, 40k being a spike in volume in that case. Okay. So yeah, if we just do this, look here on the chart. I mean, this is Bybit and Binance. To put together. So this is Bybit and Binance together. What you can see here is 8.4 million liquidations. This is like an exorbitant amount. This is a crazy amount of liquidations coming in at this moment in time. Literally, you're seeing so many, 8.4 million, and this is beyond 30, 40k. But this is when I'm looking at, I'm combining different pairs together. If you're looking at Bybit on its own, look at this amount. But this is a crazy amount even for the aggregated pair. Okay, so just keep that in mind. It's similar to relative volume. It depends on the pairs and depends on the exchanges. You can be using velo data, etc. for this as well. We're going to be adding different ways to be looking at liquidations as well through Exocharts. So I just keep that in mind. There's a lot to come there, but it's all relative. Again, looking at volume spikes and liquidations together is really, really useful. Even like right now on the chart, as price hit VWAP, you can see 457,000 liquidations. No, that's still quite a high amount, to be honest with you. Even at the high, you saw something like this. So this could insinuate a potential reversal in terms of market exhaustion almost to one side. Okay. So yeah, that's not. I won't really dive into that too much. Liquidations, OI flushes. So this is kind of the last thing. OI flushes are kind of just where you see a large drop off in open interest. Again, I didn't mention this, but you could be looking at this on multiple exchanges. And it's not the actual execution side of things on noticing this on the chart isn't too difficult. You just see a larger flush in OI than most other places on the chart. Now, the best location to be looking for this, at least from my experience, is that kind of round numbers on every 1k Bitcoin, and this can really you can change this however you want, or everyone's gonna have different ways of doing things. But there's an indicator to do this as well, so be my guest and use that because I recommend it. I just won't bring it up now because it might show things I don't want to show off. But if we just hit, for example, like $70,000, right? Even like now we've just breached 70k, might be why we've seen a few liquidations. 69k. The first touch of these levels after the every 1k, you come up them at every 1k, every $500 even. The first touch of these levels for the first time after they haven't been tested for a while can really result in a lot of liquidations because it's left a lot of time. Even like here, for example, price traded through this level, and this is the thing, you don't have to trade every single move through these levels, definitely not. For example, here, price traded through this level, the first time it's been hit, you got a decent reaction, and again, you're seeing these different, but you have to wait for the time between them to generate that liquidity of people placing their, getting into positions, making sure their liquidation amount is up here, or their stops are up here, whatever, beyond a round number level, for example, here. Now you can see the second time you test it, the reaction isn't so great, but that's the thing, you're waiting for these potential reactions below this, and the best way I like to use this, for example, let me just see. So for example, down here, if we just use this, you can mark out 68k. The indicator, you just type in round numbers. That's the one I'd recommend. I might link it in the description if I can be bothered. I'm going to be honest with you. No, we'll do 67. Okay, so for example, now if price is to drop from where we are currently, if it's to drop, I like these series of lows, but not only those series of lows, it would make sense to take $67,000. Obviously, the actual best ones are the massive round ones, 70,000, 60,000. You know, even I think everyone probably remembers this one down here. But it makes it to look into these more, and you'll notice it's within the open interest flush, or people getting naturally stopped out by these levels. You know, the first touch of these levels, you know, before being tested or after being tested for a while, they don't go redundant. You know, after a while, people have their stops, etc. at these levels, and you can benefit off that, especially it comes into confluence with other levels of interest. Okay, so hopefully all of this makes sense. Round numbers, everything on that case makes sense. But that is everything I really wanted to cover. I know it's not too much, really, but hopefully you've gained some value on this, and this is helping you build some sort of system within your, you know, within your trading. I'm not here to give you answers. I really could just come on here, tell you my exact execution method, but I'm giving you kind of the ways to be looking at things and actually interpret things maybe from a different angle in that case. Again, thank you for Woox for sponsoring this video. Great over there. Go trade with them. And also, you know, if you want a free month of Exocharts to use all this stuff that I've kind of talked about, again, use them. Sign up with the link in the description. And get a free course with that as well that covers everything that I mainly cover in one that's not been released. So yeah, thank you everyone, and I'll catch you all later.